Good morning. I'm Mukesh Bubna. I worked at Citibank for 20 years before starting a peer-to-peer lending company called Monexo. It's 100% online, and we had just going to celebrate our first anniversary in India in October 2017. 17, yes. Let me start this presentation with a small story. Spaceship, men's most prized innovation, if I may say so, exploring the outer space. But it has limitations. And this whole story is about how improvisation can kill innovation. The limitation starts from the fact that those two beams, which are called solid rocket boosters, are only 2.6 meter wide. And you need bigger solid rocket boosters or SRBs to launch these rockets further in the space. So the question is, why can't we make bigger SRBs? So we dig deeper further and we realize that these SRBs are not manufactured at the site of rocket launch, but they're manufactured far away. So they have to be transported on rail and roads. Well, guess what? Along the way, there are tunnels. So these tunnels, let's go back. These tunnels can only accommodate 2.6 meter wide goods. That's the maximum capacity. So why are these tunnels made for 2.6 meter wide? Well, the answer was because these railroads are 4 feet 8.5 inches. God knows why, but it's exactly 4 feet 8.5 inches. Is it getting you curious enough? Why 4 feet 8.5 inches? Well, these railroads in US was laid by Englishmen, and they used to make in UK everything for 4 feet 8.5 inches. Why did they do so? They were the same people who built the tramways. It's getting too much, right? Why did they make trams for 4 feet 8.5 inches? Because before that, they made wagons with 4 feet 8.5 inches. Now, why the hell is this 4 and 8.5 inches coming again and again? I'm very curious. Because these cobbled roads, I don't know how many of you have seen these cobbled roads, but they had a gutter which were 4 feet 8.5 inches. If you did not drive in that, your wheels will break. They were wooden wheels, right? Now, why this? Romans were the chariot horse riders. They had laid the whole roads in Europe, the cobbled roads, and when they had started making their chariots, they were 4 feet 8.5 inches. Well, we dig deep in, and the final answer, why it's 4 feet 8.5 inches? Because that's the distance between two horses' ass. So we can blame why our rockets cannot go far is purely because horses' asses were 4 feet 8.5 inches. So you can imagine if you try and build innovation on an old model, you can go only that far, right? So with that story, I want to tell you that change is an opportunity, right? And I'm going to make a very bold statement coming out of banking system. Banks have remained the same for 100, 200 years. Yeah, they got modern. They started like that in a tent. They got themselves a decent wooden building. Now they're towerings of ICICI, HDFC all over the place, right? They have some mobile apps. But basic premise of a banking is borrow cheap, lend dear. And lend when you don't need money. When you need money, you go to them, they will not lend to you. And they hold a huge amount of spread between themselves for 3 major reasons. One, for shareholder return. Second, for huge fat salary. And third is for buying those towering buildings for themselves, right? And that's what makes us feel very safe, because one, they've been 100 years old, and I just told you the 100-year-old century process got our rockets only to a certain space, because horses' ass were 4 feet 8.5 inches. So we are exactly the same. Now let me reveal the second secret. Consumer loans in the banking world are the most profitable asset which they do. And that's why you will see so many advertisements coming out on a regular basis. Promotions to tell you, use your credit card and we'll give you 10% back. It doesn't make economic sense, right? You spend on Big Bazaar on a credit card and they say, hey, get a 10% discount. Why? Because it's a very profitable transaction for them. Now, that asset pool is not available to you easily. Right? It's very difficult to get that asset pool because you don't have the understanding of how to lend to me. If each of you came and said, I want to give you money, each of you will assess me differently. Some will think, oh, this guy is wearing a suit and speaking at Taj, he should be very creditworthy. Somebody will say, oh, he's self-employed, God, he's risky, because that's your perception, right? When we all go to buy an apple from a street vendor, we negotiate, but when we go to Big Bazaar or any other place, we just pick up a packet and move, right? It's not possible. So that's what banks do. Banks lend out, they have signs, they have people, lend out to individuals. Then they create a portfolio, get it rated, sell it to a mutual fund, which becomes a bond, and then we buy that back. So that same cycle keeps going on. And this process is called securitization. So we get partake into this whole process of the consumer loan through this long chain, whereby every intermediary who touches that process keeps his cut. And that cut can be as high as 10% across all these people. Now, Monexo or any peer-to-peer lending company is bringing that ability for you to lend to individuals directly. How does this work? Various peer-to-peer lending companies could choose a market segment. Monexo has chosen salaried borrowers. They are one of the safest class because they have a constant cash flow. If you think of SMEs today, demonetization killed them. Now GST has killed them, right? But these class get salary on the 1st or the 7th of the month, irrespective. We have chosen urban people because they are very digitally savvy. So we are an online platform, we don't have branches, we don't have people. So they do so everything online. And then we have lenders, individuals, HNIs, family offices, NBFCs, who come and lend on our platform. So I'll show you a demo. But in this whole process, the loan is reached out to the consumer and they make monthly repayment through us. No bank involved in between. Surely bank is involved because money movement is happening, but the bank does not make a decision. You make the decision who you want to lend to, right? In this process, what happens is, what you are getting is 6%. Now you start getting somewhere after risk and our fees 14-15%. And the borrower who's going to pay on a credit card 44% or any other product as high as 30-35%. Will start paying 18-20%. Now, in my view, this is a win-win. And for us, we make 4 or 5% as a fees, as service fees to the borrowers and the lenders. And this peer-to-peer lending is not my imagination. It's a 10-year-old industry, growing at 151%. It started way back in 2006 in China. In UK, a company called Zopa started it. It went majorly taken up in US by 2 companies called Lending Club and Prosper. Then it got picked up about 5 years back in China, a company called Credit Ease, Zhenren-Dai, PP-Dai. These are some of the companies which are majorly there. And in 5 years, China is about $160 billion industry. Lending to consumers, to corporates, to SMEs, right? India is a very nascent market still. People are getting aware of this industry. People are starting to participate in this industry. So on Monexo's platform today, as I said, we have individuals who are lending as little as 1 lakh rupees, and there are people who are lending 1 crore of rupees. But there can be individuals, there can be LLPs, there can be NBFCs, there are banks who are coming in. So our mission is to make borrowing for a salaried individual in India through an unsecured credit very easy, and for the other side, for the savers, give them attractive return, not the demonetization effect which is happening where everything is coming down, and hopefully that will trickle down into bond market, it will trickle down into the liquid funds, etc. And we've seen the inflow into the mutual fund market has been at record high for the last 3-4 months, purely because there's no alternative. Property market is capped. Those funds which were being deployed as a loan to a developer at 18% with collateral, suddenly everybody's got collateral, not money back. Right? I didn't want to invest in the property, I wanted money back. Now suddenly I have got 50 flats and I don't know what to do with it. I'm not a property manager. Right? So people are starting to look at alternative investment, and as a theme of this day, peer-to-peer lending is the next big alternative investment, and it's not happening only in India, it is happening globally. Who are we behind this company? I spoke about myself. I've spent 20 years at Citibank before starting this company. Sonal comes from Tata Consulting Services, so she's built a lot of platforms. So when I do a demo of this whole platform, you'll see it. Sundar is a chartered accountant. Now, if anybody's been in India for long, you'll see when you apply for a loan, it doesn't go to the bank. It goes to a chartered accountant who reviews the file and says yes or no, and then the bank follows through. He's been doing that for the last 30 years. So it's a great mix of a team with large experience in consumer underwriting, right? Because that's the core of our business. Understanding the risk involved in lending to Mr. A, Mr. B, right? Again, how big is the market already? In last 4 years, the market has doubled. So it was 1,59,000 crores. It's gone to almost 3 lakh crores. This is purely unsecured personal loan. I'm not talking about durable loan. I'm not talking about credit card. I'm not talking about mortgages, right? This is purely unsecured loan given by banks and NBFC. If you look at Bajaj Finance, Capital First, their balance sheets are growing majorly. The reason being, these asset classes are not giving the losses which they used to give in 2004. There are certain checks and balances which have come into the ecosystem. While it feels unsecured, there's no collateral like a property, but it behaves. The behavior of the portfolio is better than or equivalent to a secured portfolio. You don't need a collateral, right? Collateral is only the last resort if the behavior is bad, right? I'm not again saying for any reason that these portfolios don't have losses, but they have less. And what has changed this and why these banks are gung-ho about it? Because India is getting younger. The average age of India is 29, right? If you look at the demonetization, everybody is getting digital, right? People are getting used to mobile wallets. You are leaving a lot of more traces digitally, and PAN and Aadhaar is enabling us to find a person at any place, right? So these are 3 big waves coming and why this industry will grow, right? I talked about India average rising GDP. We are a GDP per capita of 1.8 thousand US dollars, 1800. China is $7,000. India's GDP is about $2 trillion. It's supposed to double in the next 4 years, right? If it gets to 4, this GDP will rise. Our population I spoke about is younger. Again, I keep saying in India, 3 generations are living currently. My father, who saved his money till the age of 50 before he bought a car. Myself, I bought my car at the age of 25, first job, took a car loan, bought a car. And my son, who does not have any income, but he would not walk around without an iPhone, right? As he gets to workforce, they consume more. So as India gets younger, it will consume more. And without consumption, India's GDP is not going to grow either way. So we need consumption to come through. And that will fuel the need for demand. And the last chart out there, sorry you can't read the figures, where household debt to GDP in India is only 10%. China is 44%. If you think of our evolution, we will follow the path of China. GDP will grow, people will get more money as salary, and will consume more. So this household debt will grow. We've been a nation of savers, but as I said, my father generation is sort of slowly going away. And that saving will come down, and those younger generation, which is India's age of 27, will start consuming. Again, coming back to Monexo, our first core pillar which we built in as a capability in our company is risk assessment. We have studied close to 20 million records in India through CIBIL and CRIF without their names, and mapped out whether people in Delhi behave differently than Bombay, people in Bombay behave differently than Pune, and where is the best credit available, and what is their behavior, what is their age, what is their income, and how do we bring them to our platform. Second pillar which we built is technology, digital. We don't want to be having the same brick and mortar as Bajaj Finance has or a bank has, because then we will be no different. And as I said, we will have higher cost, and the higher cost will mean higher rate of borrowing cost for the borrowers, and we will not be able to give you the return which we are able to give it to you now. Third is partnerships. Now, different kind of partnerships we are talking about. We are launching a corporate employee loan program. What does that mean? If you have 100 employees and you putting out your own working capital towards employee loan, don't have to do that. We'll make you a website which looks like yours, and we'll manage the loan portfolio for you. Right? And finally, India is getting digital. People are using their phone. You need to attract the consumers from that channel. We don't need to do them on printing a full page ad on Times of India. So these are 4 capabilities which we are building, and we're very proud that we have built out the first 2, and now we're building the next 2 in our company. A lot of people have asked me on the booth out there, how do we do screening, grading of a person? The first thing we understood from a borrower perspective, what they're looking for are 3 things in any, not particular order. They need simplicity of application process. Second is they need a fast approval. They need to know whether they're going to get the money. And then the third is affordable loans. That's what they're looking for. And our digital platform makes them simply a process of 4 to 5 minutes to apply a loan. And as they're applying, we are pinging into various databases online, including the bureau, including the PAN, including the Aadhaar, including some of the global database around fraud, and pull out whether this gentleman should get a loan, yes or no. And then we give an approval within a minute, saying, yes, based on the data, till now what you've given us, we can give you 2 lakh rupees at a 18 to 20% interest rate. If you are okay, continue and give us your documents and connect few more data points of yours with us. As you do so, in this whole process, our system churns out the real pricing. A human being looks at the documents currently to ensure the documents are genuine and they are of the person who's applying for the loan. And within 1 hour, the approval gets done, the borrower accepts the loan, and it gets listed in the marketplace. Our target lenders, surely this is a family office summit, so we're looking for a lot of family offices to join our platform and make this product available to their clients. We already have signed up few family offices out of Bangalore and Mumbai as our partners, and they are taking this product to their clients. We have Ultra HNI, so if you are an IFA, or you can even sell to a person, entry ticket to our platform is as little as 1 lakh rupees, and then you can distribute that over 20 loans of 5,000 rupees each. Now, if Mr. A is borrowing 1 lakh rupees, you don't need to put 1 lakh rupee towards him. You can buy only 5,000 rupee of his loan. So you are diversifying. So people who are coming with 10 lakh rupees are diversifying across 100 plus loans. As this diversification happens, the risk gets minimized beyond our screening. I talked about screening. I talked about minimizing risk through diversification. The third one is we don't touch your money. We don't have a deposit taking license. RBI has only come out with a peer-to-peer lending guideline. And as part of that, one of the things is we have an escrow functionality with IDBI trustees. So your money is safe with them. Even the borrowers pay back to them. So we never touch your money. It is far away from our accounts. We are proud in the last 1 year, we were the first company to do complete digital process. We were the first company to launch Auto Invest. So people say, if I bring 1 crore, do I need to look into every loan and press a button? No, you can set up an Auto Invest like a trading thing, saying I want to buy loans which are 15% to 18% interest rate with a probability of default of less than 1%. So the system will run that algorithm on your behalf and say, okay, lend 10,000 rupee to every loan. We were the first one to sign up with the escrow services, which gives you the trust and belief that we will not be able to run away with the money. We'll be soon launching a secondary market. Just imagine you can buy and sell loans, right? So again, as young company, it's very important to have committed founders, which we are. We're early mover in the industry. As I said, India is just starting to begin. It's not like China where it's $160 billion industry. Product which is tailored to high demand. Personal loan is going to grow rapidly. We've seen it doubling in the last 4 years. We believe it will double up in next 2-3 years, much faster than what has happened earlier. For all of us, price is very sensitive. Demonetization is taking the shine away from people who are keeping money in fixed deposit liquid funds. This is a new asset class. Anybody can start with as little as 1 lakh rupees. You don't need to leave your home. You can be at your home on your mobile and do this. Our credit analysis 1.0 is already data driven. As we work towards 2.0, we are attracting a lot more data into it. I can give you some examples of that. One of the data point we are now starting to look at is geolocation. When you're applying for a loan, where are you at that moment? Are you applying from home, office, or a third location? That gives us one more indicator whether you are a genuine borrower or not. And we are live and growing rapidly as we speak. And India is getting ready for peer-to-peer lending. I'll be happy to take questions. Again, our vision, our mission is to make borrowing very affordable. It's not about making people go over the hump, but responsible but affordable, and investing more rewarding for people. They should be able to keep their money protected above inflation rates and not be keeping money idle in the bank account. Thank you.
So how do you qualify your borrowers? Verifying whether
So, yes, currently we are only, our focus is one product, one category. So we're not, there could be various categories. There could be blue-collared employees. There could be cash wage earners. We are only looking at urban salaried borrowers. We're not going to blue-collared employees right now. We're not going to contract workers. You have to be in the job for at least 3 months. And we're targeting young people, those people who are coming out of college and need money. I was lucky, I was at Citibank, so they gave me a loan and they gave me a house when I joined them way back in '93. But today when you join a company, they don't give you a housing loan or anything. They tell you come to Bombay, and the moment you land up in Bombay, you have to pay 6 months or 10 months of house rent deposit. Even if you live in Navi Mumbai, you can't get a rental of less than 20,000 rupees, right? Where will I give you a 2,40,000 rental deposit? I want to invest in myself. Those days have gone where you study and become a whatever, you're a postgraduate and then you join a job. I'm a graduate, I want to do a 2 years job. At the same time, I want to do an evening course. Now, I want to get an executive education loan. Where do I get it? Come to Monexo. Hey, guess what? Life is short, I want to have a little bit of fun. Now, going to Thailand is cheaper than going to Kerala, right? Nothing wrong with it. That attitude change is happening, right? And there's nothing wrong. We are judging the younger generation attitude with our attitude, which is not right. Globally, that's the attitude. Live today because you're going to get consistent salary. And we are on a growth path in India. So jobs will come out, and education is enabling people to do white-collar jobs than a blue-collar jobs.
How do you handle recoveries?
Sorry?
How do you handle recoveries bad debts?
Sure. So it starts 5 days before even the repayment is due. Or in fact, it starts way back when we make the loan. So there's a huge screening process, which I told about. It's digital. Based on the various data points pulled by our system, we grade all loans from M1 to M8, M1 being the safest customer, M8 being not the safest customer. Again, today on our platform, out of 100 borrowers, only 25 get approved. There are various reasons for that. So you get screened borrowers. After that, they register NACH. So they give us a NACH or a ECS mandate, which we can debit to their bank account and pull the money into IDBI trustee. Once that is registered, a debit instruction is sent to their bank account between 1st to 5th. If they bounce that, our system sends them SMS and email reminders saying, hey, you bounced it. Guess what? We'll present the NACH in 2 more days' time, ensure you have balance again. If you bounce that again, a late fee and penal interest charge starts, which is more like a stick. However, at that point of time, we believe in education. We send a video on educating them what can go wrong if they don't pay this loan, which means your CIBIL rating will come down, you'll get a legal notice, and maybe you even may get an arbitration notice to your employer, right? And if you're young, if you're 50 and you don't want to borrow again, maybe you want to default and run away. But if you're young Indian, you will not be able to even buy a house or even a car without having enough money in the bank account, and you will take a loan. So nobody will give you a formal credit. So you'll be only dependent on your friends and family or those corner pawn shops which will charge you 60-70% interest rate. So we have both stick, carrot, education and threat, if you may say. And finally, if they still don't pay, we have field collectors who go out and retrieve the money from them.
We do that. In this whole system, it is the unsecured loan which you are doing. Now, when you are checking the CIBIL rating and other ratings, if he is having, rating and everything, he'll rather go with the banks or others. Why will he come to you?
Great question. Thank you for asking. Banks are very conservative. Today, they are more focused about control, compliance, and what is going through corporate loan programs. So they are keeping their balance sheet as clean as possible. They have a term called Cat A, Cat B, Cat C. How many of you heard that? Cat A means you're a multinational company and doing work in India. Cat B means you're a national company and listed on stock exchange of India. And Cat C are those companies which haven't made to stock exchange, but they are big name in the industry, the top 10 names. That's where they do business. Doesn't mean anybody working for my company is bad. And those are the customers who go to NBFCs today. So our target market of customers are those who are going to NBFCs or whom the banks decline. But having said that, I have customers from names like Dell, IBM, PwC, KPMG. These guys are coming because I don't want to deal with a human being, a third-party direct sales agent. How many of you are aware of direct sales agent? You dealt with him, right? I don't want to deal with him. I don't want to give my pay slip, my Aadhaar card, my checkbook copy or anything to this gentleman because I don't know him. And what will he do? Frankly, I can tell you today, if I have your PAN and Aadhaar, I can be imposter of yours. So irrespective whether you do business with us or not, I will literally request you, each of you, to be very, very careful who you give and how you give. And please write the reason on the form or the document why you're giving that document. Don't give, idly seal it. Otherwise, they can make copies before they reach office and distribute 10 more people. You should seal them and you should write very clearly. This document has been given for a loan application at ICICI Bank. Then if he photocopies, then he has to do a lot of other things before he can do so. Right? Sorry, long answer.
You said if I will individual investor in this and I put in, let's say, a lakh, I can take a portion of somebody's loans of 5,000 or 10,000, whatever. So how do I decide?
I wish I can do a demo. Is there a Wi-Fi working here? Is there a Wi-Fi? Sorry, there's no Wi-Fi, but if you come to our booth, I'll show it to you. So you see the listing of loan. As I said, there are 2 ways you can do it. One through manual process, and the second is through automatic investment. Each loan is graded M1 to M8. M1 starts at 13%, can go up to 15% because within M1 there's not everybody same. And M8 can start with 26% all the way to 30%. right? The characteristics are shown to you. Names are not displayed. We believe in privacy of a borrower. If he had gone to a bank, he would be treated as a very private client. It's his matter. So you will get all the traits of the borrower, and you can say, okay, he's borrowing 1 lakh rupee. I only want to participate with 5,000 rupee because it's M8. Then you see another M1 loan, and you say, hey, okay, he's borrowing 2.5 lakh rupees. I want to participate with 10,000 rupees. So you can choose. And every time you do that, we send you an OTP. So make sure that security is also complied with. Now, you don't want to do that. You've brought in 1 crore of rupees. You're a very busy gentleman. What you do is go to our auto invest feature. And you say, I want to give only 0.5% of my money to every loan which is listed on the platform. Or I only want to give money to M1, M2, and M3, which I call conservative risk portfolio. Or I want to give a diversified risk portfolio. I want to give a moderate risk portfolio, M3 to M6, and a high risk portfolio. You can create these portfolios of your own, and the system will keep allocating that money to each loan as they get listed. So you'll be first in the queue in an auto invest before anybody else can invest. And if you're manually investing, maybe we send you an email, but by the time you log in after your days of work, that loan may be funded. We've had scenarios where loans have been funded in 3 to 4 minutes.
What are the spreads in that M1 to M3 category? So for example, it's 30 to 15%, right? And you said your spread is about 4%.
No, we charge 2.5% as a recollection fees. We have no sign-up fees for you. We have no, when you bring in the money, whatever charges we have to pay to IDBI or anybody, we pay from our own pocket. Once we collect your EMI, so let's assume you lend 10 lakh rupees this month, next month I'm supposed to collect 30,000 rupees. On that 30,000 rupee I collected for you, we'll charge you 2.5% fees. So think of mutual fund industry when it started, it had an entry fee, it had management fee and exit fees. In our case, there's no entry fees, there's only a management fees. That too on success. If you don't collect your EMI, we don't charge you. In a mutual fund industry, even if it's a big industry today, they don't care whether you make money or you don't. They charge you upfront, right? No, we don't carry any risk. We carry reputational risk. We carry our business risk with us, but we don't carry a risk on the portfolio.
What's the risk for the investor?
I think there are 2 risks which you carry. One is the credit risk of the borrower. Second risk you carry is whether I survive or not as a company.
As a risk of the borrower. Okay, if the borrower fails to pay the EMI, what is the remedy for the investor?
So, as I said, we do whole collection process for sending Section 138 notice, arbitration, CIBIL reporting, field collectors, telecollectors, all that we do for you. But your risk is already minimized. Think of if you brought 10 lakh rupees and you've given to 200 borrowers, 4 go bad, it's part and parcel of your...
How much is the parent bad difference?
We don't...
That will solve the...
So let me answer what is default. People understand wrongly. There are 3 things which can happen. 1, fraud. I did not exist but I take money. Second, I paid delayed. And I can pay delayed by 30 days, 60 days, 90 days, 120 days. If you do not pay in 4 months consecutively, that's what is considered as default as per RBI. 4 months. Today, we have 0 on default. How many people are paying delayed? We have various buckets. On our website, we have declared 0.66% of our portfolio delayed by 60 days. On fraud, till date, no. None. But we have had 2 cases of people who've taken money. They were genuine human beings, but they moved out of their job and home. And we are finding them through police assistance. We've already filed a police case against them, right? With their PAN and Aadhaar and everything else available with us with the banking system, we can find them. And their CIBIL report has already gone down and they're accessing their email. We know that they're accessing their email. So when they get our email, we can figure out whether they're reading their email or not.
How big is the portfolio right now in terms of total lending?
We have crossed about 10 crores.
Number of individuals, number of cases.
Divided by 1.2, 1.3 lakhs per individual. We, 36 months. But let me give you, it's not that he'll pay a bullet payment after 36 months. You're getting 1/36th of your money every month, which enables you to compound your money. Think of a bank deposit. You put 1 lakh rupees for 8 months, 1 lakh rupees blocked. Here, if you put 1 lakh rupee for 36 months, you're getting 3,000 rupee back. I'm just making it up.
It's like
So you can reinvest that money and get a higher yield.
it's like a fixed term or
Depends on each borrower. So we are launching a new product, which is going to be 50,000 rupee loan for 12 months. That's it. Standard product. You are very fresh out of college, don't have a credit file, will only give you 50,000 rupees to few universities of students, but they've got a job. They've got a job now, they want 50,000 rupees, whatever their need may be, 12 months. So we will have products between 12 to 36 months.
Earlier closure of a loan account is possible,
Yes, sir.
and how about the investors withdrawal, earlier withdrawal, eventual?
So today we don't have that functionality, but come end of Q4, we are launching secondary market, so you can trade your loans. Again, we have to create liquidity on the other side, but technically it will be available to you, legally it will be available to you, and we have to find buyers on the other side. We're not going to do discounting of loans initially. We're just going to say this is the value you want to buy or you don't want to buy. But over a period of time, think each loan will have its own NAV, and you can buy and sell those.
Will it be regulated by RBI? Because that RBI is also coming up with some.
Fantastic question. Typically, a lot of these investment grades are managed by SEBI. However, SEBI and RBI had come to a conclusion about a year and a half back saying this will be regulated by RBI. At that point of time, they also came out with a guideline, and that guideline had 6 key pillars. One, this company, a peer-to-peer lending company, has to have a 2 crore capital. Second, as and when the regulation comes out, we have to register in the new category of NBFC called NBFC intermediary, not NBFC for microfinance, for affordable housing, not deposit taking, NBFC intermediary. And it defines what all can we do, exactly what we do, from originating a borrower to collecting money. That's what will be allowed. Third, it said what we cannot do or can do. So first, it said we cannot take deposits. We don't. You are putting your money in escrow account. We just enabled it in a click of buttons for you. It also said that we cannot give you guarantees. So I completely keep starting every meeting of mine saying it's not a guaranteed product. However, the diversification, screening, all these make, and the behavior of the borrower in the economy and the checks and balances will not, unless there's a catastrophic event, there will be. Fourth, it said that the team should be fit and proper management, and assured you that all of us come from a fit and proper management. We've been running banks for last 20 years individually, and as collectively we have 70 years of experience. Fifth, it said that, and it's very interesting, that the company like us has to have a living will. To your question, what is the risk? What happens if I shut down? You guys have given loans to a lot of people. With our escrow company, we have living will. Even if I shut down, they have access to my technology and they'll continue to service your loans. Right? We are the only company in India today who has that living will. No. Sorry? IDBI trustee. A trustee is always available, and these guys are big company. They have LIC, IDBI, SBI as their shareholders. Right? So I can imagine, I can tell you a lot of people are not able to create this living will because they believe it's costly. We don't, right now, and even for going future, if people ask me, are you going to increase your fees from 2.5% to 5% when we become, no. We are going to be more efficient than what we are today, and in fact bring down the cost. Right? And the last one is, as and when the guideline comes out, we have to report into RBI certain data, which we are ready for. So it's in annual. In fact, Mr. Urjit Patel had gone out on record about 6 weeks back that it's going to come out anytime soon.
As a lender, I'll be able to see you as lend the money after I've selected it?
Only in the event of default.
Only in the event.
Yes. So you will get everything else. Frankly, the name, call me Rose or call me Chameli, doesn't make a difference, right? what will you do with the name? You give 5,000 to GAIE in Nagpur. You're not going to go from Bombay to Nagpur.
To what extent you reverse the
Only in the event of default, just so that you feel protected. We've got ourselves audited by PwC recently. So they have looked at all our processes, all our security, and given us a report.
In case there is a delay, you don't have.
No.
Is there any regulatory disclosure requirement at the moment about performance and the risk rating?
To RBI, no, but as a investor, lenders, you come to our platform, you'll see certain amount of data.
Will that be a validated auditor because duly checked by any?
So yes and no. I have got an internal audit done, but not for a volume certificate. Right?
Currently the funds are all investor funds or is it your own money?
Every penny of this money on the platform, which has been lent out, is people like you. They are.
So we can check your, we can talk to some of them, you invite them.
I don't know whether they would be. I don't know if I told you that I'll send you telephone calls of future investors, but we have made some videos which are available on, and they'll be online very soon. So you can see them.
Which markets are we seeing today? I mean, which cities?
So for lenders, we are open to all India, and we have customers from Shillong all the way to Rohtang, and they have come themselves through our digital marketing. But borrowers, we right now focused on 4 cities: Bombay, Pune, Chennai, Bangalore. So I would say 90% of our portfolio come from these, and the remaining 10 come from other metropolitan cities.
The competition in this space?
Fierce, which is good, but it's competition from NBFC. Competition is from the lack of people moving away from mutual fund or fixed deposit. They're happy earning 3.5% or 5.5% or 6% in a fixed deposit rather than trying out a new product at 15.5%. So that's the competition. I'm not being arrogant here. I don't believe peer-to-peer lending has come out in a big way in India as of now. And whether 2 companies or 10 companies, there's enough space in India for more than 10, 15 companies. And as you've seen, NBFCs have prolificated in the last 3 years, which is good.
We will get a signed document for disbursement or do it based on online.
So IT Act 2008 made electronic signature valid as per requirement. You can go to court with electronic signature. That means I agree. When you downloaded so many bank applications, what did you do? You said, I agree. When you downloaded Paytm, I agree. When you bought a ticket for Jet Airways, you said, I agree. Even if that contract is only for 24 hours, there can be disputes. So IT Act 2008 is what we're compliant with. Again, let's not talk about 4.5 feet, 8 in. No, only by I agree. There's no, I can't make this engine fly if I ask for physical document. It will not work. Yes. No, I'm just making sure that what is the philosophy behind it.
Tell me, if the guys who are putting in the money with you, how would they show it in their books? Do they show it as investment or do they show it as
lending?
So wouldn't they be required to be taking a license for lending and stuff like that?
So there are case laws which show as that if this is not your main business. So again, in NBFC, if your balance sheet is more than 40, whatever percent in investment and something, you have to take NBFC license. But as an individual, if you're a doctor and you put 4 lakh rupees and your main income is 25 lakh rupees coming from somewhere else, there are case laws which say you don't require a money lending license. 2, as a spirit of money lending license, it is about protecting borrowers from high interest rate and a wrong practice of collections. Now, you guys are not getting involved here. And we put all ethical practices of banking into our processes. And once the guideline comes out, this will be as clear as you can think of.
Will it be lending to Monexo? Will it be lending to Monexo?
No, it will be lending to the end portfolio. So we will be able to, I will give you the unique identifier of all the loans. So we'll show you a statement. We send you a quarterly statement of your loans to our lenders. And if any of you want to get it, just come to our booth and we'll email it to you. Last question. These guys are really behind. Thank you very much for this engaging session, and we'll be available full day there.
Why would a borrower come to you and not go to an NBFC or instead of an NBFC, why would the borrower come here?
3 reasons: simplicity, speed, and affordability. Anybody who has a physical branch has to charge higher. Digital world is what the new world is looking for. We are on digital, and we give approvals within a minute.
What is total turnaround time by the time I get money in my account?
Depends how quickly we can fund the loans. Sorry, this will be the last question I'm getting. Depends. So as I said, we've done in 4 days and we've done in 14 days. Initially, when we didn't have enough liquidity, we've taken 14 days. Today, there are loans which go in 4 minutes also.
When did you start this?
About a year back. Thank you very much for this engaging session. Really appreciate that. We are available in the booth out there. I'll be there. So if you're most welcome to come, see the demo of the platform, ask any more questions which you didn't ask, get comfortable. We want people who are comfortable with this product to only come onto it. There is risk involved, but believe me, being a banker, I've seen banks build a large portfolio and a very profitable portfolio. Thank you very much.
Just
Thank you very much.